Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at installed building products, ticker IBP. I've been searching for another decent stock, one with good fundamentals that I think will outperform markets, and I think I found one here. But like a lot of the other ones that we've taken a look at, I think it's a bit overvalued at the moment. So we'll dig into this one and see what the pros and cons are for it and what we're expecting. Earnings yield looks decent, 6.82%. We'd want an EPS of 9.86 for what we're paying, and what we're actually seeing out of them is better than that. They're expected to come in at 11.06 this year, 11.48 the following year. Cash flow, strong. Jumped above 10% this last year, 10.03. On average, they're around 8%. Cash flows, super strong. Discounted cash flow comes up with a value of 241. I'm coming up with a total fair value of 184. Currently, it's sitting at 197. So if it pulls back closer to the 52-week low, I would definitely start considering this. Dividend yield, low. They're not a massive dividend stock, definitely a dividend growth stock, though. 11% on average, 11.21. Payout ratio for this last year was 22%. Based off their new EPS, we're looking at 17%, so they definitely have room to grow it. ROE looks super high because it is 36.36, skewed a bit by this debt to equity. For the industry that they're in, it's not surprising to have high debt. Cash flows are super strong. I'm not too worried about it. They did have a lot of growth 3 years ago, but they also had really strong growth in their assets. Their assets are outpacing their debt. They have the revenue and cash flows to cover it. I'm not freaking out about that. ROI, just about 10%. ROA, 12.3. Great returns right there. Margins, gross 33.5, on average 31.32. So they are up a bit and right where we like to see gross margins. Net is a little low, came in just shy of 9%. On average, they're 7.25. I would like to see them closer to 10, but they are on an uptrend with that, so it's not awful. PE currently trading for 17.84. 15 to 20 is where you see the majority of stocks. Earnings are only expected to grow 3.8%, so that does give us a price to earnings growth ratio of 4.7, which is really high. We like to see that closer to 1. At our margin of safety, so 30% below the fair value, ideally where we're getting into this stock, would be 11.2 for the EPS and 2.95 for the PEG. Still a bit high, but the EPS looks better. So really their earnings aren't growing at a decent rate. Yet their revenues look decent. Their share count, the buybacks look good. So I almost disagree with analysts on the EPS for this company. Analysts are saying in the next year, revenue is going to grow 6%. After that, 5%. So we'll stick with 5, maybe 5.5. Bump this up just a tad. Cash flows, 5% in line with revenues. We'll bump that up as well because that does take them below 10%. I'd like to see them hold 10% or above. Assets, we're just taking last year. 6% liabilities, same thing, 2% last year. Dividend, they are massive on dividend growth as of late. That's something I'd like to see continue. They definitely have the room for it with their earnings. They do share buybacks, which already give them a boost to their earnings and save them money on that dividend. I don't think that'll be a problem for them. And then margins, I think we can bump this up, not just 1%. Let's see what 1.5 gives us. I'd like to see in 5 years margins 10% or higher, and what it will take for them to get there. Now, I don't want to do anything too crazy. 2.75 will probably be what we're looking at here. Yeah, 2.75 for the margins. This thesis here gives us annual growth of about 10%, so higher end of market returns. Once you factor the dividend in on top, you're outperforming the market by about 1%. So if you're buying at today's price, you're looking at a fair value in 3 years of $200 and in 5 years of $244. So I'd like to see it pull back a bit before I'm getting into it. That 184, you're a lot closer to market returns. On this one, if it got down anywhere near 130, I would start selling puts and collecting the premium and hopefully getting assigned. So we'll take a quick look over at the price sheet, see how everything is trending, and I am liking what I'm seeing. Everything up and to the left, nice linear growth in that balance sheet. Next up, we have the earnings. Earnings are on a really good trend here. Fair value moving in line with the earnings. In fact, it's lagging a little bit in 2024 to all the other metrics. Actual share price, sitting up here right now, it would have been ideal to buy this back in 2023. Too bad I didn't know about it at the time. I most likely would have purchased at that price at that time, seeing what I'm seeing. Especially since back in 2021, it was higher. And then there's cash flows. They're way up above everything else, kind of leveling off a little bit here towards the end. So no major concerns at all with this one, aside from the current valuation. So I'm definitely putting it on a watch list. I want to see this thing dip down to 180. I'd really start to consider purchasing, and I'd have to go from there. I always try and figure out what kind of investor should purchase a company, and this one I feel like has a little bit for everyone. I mean, it's not massive growth stock, but it's got some growth. It's got sound fundamentals. It's dividend growth, not necessarily a current dividend. Strong cash flows, really everything aside from someone who just looks at the earnings and the PE ratio. I wanted to make this one quick. It's going on the watch list. You'll probably see it brought up on the stocks that I'm buying and avoiding in the month of February. Make sure to keep an eye out for that one, and I'll catch you guys next time.